So let's continue. And this applies to every single concept, because I'm not gonna answer you if you haven't spent a few hours at chart and you don't get it, right? So market intentions, this is pretty clear. Let's get to the next one. And yeah, rebalance is a fill of IPA or FEG. What is liquidity? Liquidity, so most of you guys here are from SMC, so we are not gonna spend that much time explaining it. But what is liquidity? Fuel for the market. If market maker wants to buy, of course they want to buy from a cheap price, right? And for that, you know, let's say 1.0, 0.8, and 1.2. And they want to buy at the cheapest price. So of course, nobody's gonna sell that cheap, right? For no reason, or short that cheap. So they have to force positions. What does it mean? Simply by inducing people to go up and triggering their stop losses. So this is forcing people to become sellers, to become short traders. Active positions, which can be highs or lows, and simply highs or lows can have a trailing stop loss near them or a stop loss above them, as structural liquidity, and that's the one. And future positions, simply a simple inducement. Breakout traders will jump on this guy, right? This is a future trade, and SNC traders jumping on this OB. So that's the whole liquidity for the market. In a nutshell. Do you get it? Press 1. And if you don't, press 2. And it's pretty essential to understand why this is happening, why the liquidity graphs are happening, and at what price levels. Okay, so we can go to the next one. And I'll get to liquidity types. So from the most general perspective, right, we only have 2 major liquidity types, and then everything falls under them. It's going to be either buy side or sell side liquidity. And what does it mean? It's just that there are only 2 types of traders in the market. It's going to either be sellers or buyers, right? So we can go to the trading view. And why is it called buy side or sell side? It's simply because of major levels. There are going to be stop orders on them. So for example, this is going to be buy side liquidity. This is going to be sell side liquidity. This is buy side being taken out. This is sell side being taken out. This buy side, right? All of this falls under this liquidity. Yeah, sell side, perfect, buy side. Exactly. So this is nothing you've never heard of. Yep, perfect. So this is just nothing new for you. And we can go to the next slide.
Sorry, I have a question. Is the trend line liquidity sell side as well, or is that different?
Are you Mihai?
Yeah.
Oh, this is my first time hearing you, bro.
Yeah.
Yeah, it's like, yeah, it's sell side liquidity.
Okay, yeah.
Yeah, because a simple
so even this is trend, it's sell side liquidity.
Yes.
Okay, makes sense.
Okay.
Perfect. Thanks.
So we can go to the next one. Oh, no. Go back to the chart. We have a big problem here. So there was a guy who marked this out as a big liquidity, right? But I'm gonna tell you this to make it simpler for you. This is one bunch of liquidity. This is another one, and this is another one. Why? Because this low was created after taking this out. This complete different low and complete different level. And for this, yeah, we can take these guys together, but not this and this, as the origin of those are totally different. So be aware of what trend line you are drawing. because even small details and are gonna make you pay. And the simple reason why looking at the liquidity like this, in this instance, this is 15-minute time frame. If you're gonna mark this out as liquidity, and this is 15-minute time frame, you're gonna miss out on opportunities. Simply, let's say this is first liquidity, right? This price can just do this, and you're gonna miss the whole intraday move. And again with this, what was it, like this? Yeah. So again, you can have a reaction of this, and you're gonna miss another intraday move if you're gonna wait for the whole thingy to get taken out. So yeah, so glad you marked it out. You can move to the next guy. So this is a retail liquidity buildups, and seeing this is really helpful. Like, this is what the market is made of. Like, yeah, it's like major part of the market, all of this. But all of this will fall in our types of liquidity. But it's just nice to see the build-up happening and avoiding trades if you're not a build-up trader like me. Or a trend line trader. Yeah, you can go to the next one. And now my personal liquidity types. Oh no, not yet. Okay. What the hell is this? So yeah, this is my first time seeing the presentation, by the way. So shout out to Brian for making this presentation for me when I was busy. So let's go to the first link. And yeah, so most of you are from SSC again, so this is nothing new for you. But identifying external and internal liquidity will be super helpful for us in the future, because there are certain types of liquidity cycles and we need those. So what's happening here? This is external, right, structure. External structure is external liquidity. And this is internal. It's as simple as that. And in future, or in a few minutes, you're gonna know why it's important. But of course, with price fractality, now this whole move can have a yeah, this whole move can be let's say press this, right? So these externals are then internal, right? And this would be external. Yes, exactly. So be aware of what time frame you're trading on, and and always start on top-down analysis. You know, you have to. The macro is more important than the micro. So yes, this internal and external, and we can go to the next one. And I don't know what this link is, but trading you. Oh yeah, perfect. So just on chart for you to see it. Yeah, hope I don't. Yeah, okay, let's start from here. This is external. No, wait, let's start from here. This is external, right? This is external being taken out, strong high. Then this is your next external liquidity right here, or this whole range. And this is, wait, and these points inside of those ranges would be internal. All of those. As this is the main move now. So, but then
What
you have
about this one? What about this one? External or?
this external.
Yeah, but it's inside this leg.
Oh my god, that's why I hate structure. Yeah, it's real. Structure is subjective, really. But yeah, you can say that on higher time frame. This if we go to daily, of course, this will be one main push, and this will be external, and this will be internal for that push. But I was looking from it on it from the 4-hour perspective, from the chart that we are seeing now, that this would just be the lower low, you know. Yeah, but that's why I hate structure, really. Well, it's helpful as an indicator for bias. And then if you take this range, for example, this would be external again for that range. All right, and any of those are internals. So that's just a quick showcase. And you can get to the next one, to the main event. Yeah, so those are all liquidity types that I use, and I'll explain each one of you for you. It's not important, like liquidity is liquidity, but in future you'll see the price will mirror those liquidity. So if, for example, structural liquidity is going to be taken out, it's going to take a structural from the opposite side. And we can go to the structural as first. And yeah, so simply, structural liquidity is internal liquidity, internal structure. I'll answer the questions at the end. So this is the structural, all right? It's internal structure. Then these would be transactional, because, you know, generally speaking, every break of structure is a liquidity grab, right? So we break this structure to the upside, we are getting sell stops, buy stops, sell limits, everything getting swept out. And why is it called transactional liquidity? We can give credits to Yusuf, by the way, but it's just simply because the liquidity is an opposing transaction to the current flow of the market. All right. So there's transactional liquidity, and then we have inducement liquidity, which is this. It's always the last low that broke structure. So for us, this would be a point that we would be waiting for inducement, and this would be then a possible FBOS, but we never take trade from those. Unless we are building up, of course, and there's nothing here. There's inefficiency, huge inefficiency here. So yeah, let's go to the next guy.
Can I ask you a question on this chart? Sorry.
Yeah. Can I go back to the chart?
You know, you said that inducement liquidity is here. Oh, sorry, let me annotate. So it's when we take this out, when we take the last low that broke structure.
Yeah.
So in this case, would this be the last low? So inducement liquidity, or this one?
This one, the external.
Okay, so we don't count this. This is, you said it's structural liquidity.
Yeah. And it's important for the future. But yeah, and I forgot one more thing. After price printing another high, this now is my only inducement liquidity. This all is just external liquidity. But this is where I want to see the MSU playing out.
Okay, makes sense. Thank you.
So let's go. I don't know what this link is, but hopefully it's gonna be good. Yeah, so structural liquidity, as you can see, simply this is structural liquidity, this is structural liquidity. For this whole range, right, it would be the internal for that range, and the inducement liquidity would be at the top that broke this range, that I would be expecting price to sweep. But on lower time frame, we just broke this guy, right? And this would be our ILQ that we would take the the MSU from and sell from here. So this one, and then there's nothing happening here really. Again, there's a whole range. All of it is just structural liquidity. And every time we broke to the downside, we wait for MSU. And we broke, we wait, we broke, we wait. Of course, it's not an obligation for us to only take MSU trades. This is one way of trading, but you don't have to. But as you have seen in the recent charts, its accuracy is super high, but there's no guarantee you'll get a trade every day. There is an MSU every day, but not a perfect MSU setup with all perfect, with all perfect conditions. Yeah, that was MSU as well. So, yeah. So can you go to the whiteboard? And now we can talk about the problem with MSU. So the problem with MSU is you can't know for 100% what's gonna happen. What I mean by that is we can have price do this. Okay, we can take, I'll just continue. So we can have price in the uptrend, right? And we can have something like this. Okay. So now the question is now, is this transactional liquidity or inducement liquidity? Because what's happening? This can be the FBOSS to the upside. This can be the inducement, right? Or this can be the FBOSS and this can be the inducement. So yeah, that's the only problem I have with this concept. And there's no 100% way to be able. No, it's not 50-50. You will add more confluences. For example, if you have supply, you just anticipate, but it's not 100%. As simple as that. Yeah. Oh, of course, not 50-50. It's like the chance of us being right is always higher, I'd say. If you're really good with this, you get 80% accuracy with it. But yeah. Yeah. So it all comes with experience. And that's a problem that some of you guys might have encountered. So I'm just mentioning it, that it's totally normal. Yeah. So let's continue. Oh no, let's do the presentation. Inducement liquidity. This is not important. We can go to the second link. And inducement liquidity also applies for the FBUS setup, or the MSU setup. If there's, let's say, the narrative is bearish, right? Yeah, FBUS, this becomes ILQ as well. Then after breaking this becomes true BOS. There's nothing here, really. This becomes now your ILQ, but the chance of this being taken out is very low. And this for me is already an established trading range. So that means that trading inside of this is 100% safe. And from like from 90% of the time, it's gonna hold. unless this high is in a stupid place, for example, inside of an imbalance or something like that, or a breaker, a reaction of breaker. Yeah. So how's that? No, not internal liquidity, inducement liquidity. But yes, all of those are external. So let's go to the next one. Would you open a trade even before the true BOS? Yes, I always enter on that. This is our main setup. So can you go to the whiteboard? Yeah. So what was it? Yeah. So our main setup is this for me. Enter on this, stop loss here, POI, there might be POI, or a certain candle close. Yeah, but we'll talk about that on day 3, about candle closes and opens and vector candles. So I mainly enter on this. This is BOS, this inducement, and target is this true BOS. But of course, if this is lower time frame setup, then it would be totally fine to this external liquidity. It's totally fine to take a mitigation of this targeting, price targeting, structural liquidity. When you enter after MSU, do you want price to tap into something or rebalance IPA? Like when I enter on the inducement. Yeah, so there must be something from the left. 100%. So it can be a POI, it can be a supply level or demand level, or it can be, and rebalancing is simply tapping into supply and demand. So yes, or even a breaker, that's totally fine as well. This, I don't like breakers, I can't trade breakers, but this is the only setup that I can use when trading breakers, because there's not a real way to be able to tell where price gonna reverse from, you know. And this will indicate me that it's fine to take a trade from here, and then maybe wait for lower time frame. Is this higher time frame? So yeah, let's continue to the chart. There was chart, right? Transactional liquidity. Yeah, that's not important. We're gonna skip the first link. And it's just for better understanding, all right, the flow is bearish. This is transactional liquidity. The orders, the opposing orders are now transferring here, and it becomes a flip zone, all right. And it's okay to take a trade from there, but it's not my favorite way of trading, and not my favorite setup. It's not that good compared to others. Oh, what is this? And again, we made higher low, lower low. This is again your transactional liquidity. Your transactions are gonna transfer here, and this becomes your flip zone again. So the main flow is bearish. The opposing orders are are bullish. As simple as this. Yep. So let's go to the another slide. And then we have my favorite breaker liquidity, which has the highest accuracy in the whole market, both as a reversal level and as a liquidity target. So let's go. So as the name indicates, it's just a breaker, right? That's why I don't like trading from breakers. Basically, a mitigation of breaker is liquidity after breaking the range. So, oh, okay. So we have a breaker structure, for example, then we mitigate the last buy to sell, and after it must break structure. We are gonna eliminate lit because lit will always fall in one of those 4 liquidity types, but yes, it's lit. Simply said. it complicated it a lot. Yeah. So we are not gonna talk about it in this presentation, because lit can be this as well. Yeah, we are gonna talk about it. This can be a lit as well, but yeah, you see the difference between those two. This lines up with break and retest. This line up with super resistance and with breaker, of course. And this has more validity than something like this that helps in the 50%, maybe makes price efficient, you know? So that's the main problem. But if breaker breaks two more ranges after reaction of breaker, okay. So when can we know this is a safe way to enter? Again, on the build-up. So if price breaks this, and let's say we do this, right? And we break again, and there's nothing on the left, it would be safe to take a buy here. What do I mean by nothing on the left? Either big imbalance, so there's nothing price can react of, no liquidity on those levels. In the instance when price takes out, let's say, structural liquidity from the opposite side, you don't take trades anymore, and it's not a safe trade. This is the most probable scenario for that. So that the second, so it's and then of course a demand. So there can be IPA inside of this, and this is like, let's say, a candle with a wick and prices tapping into it. Not safe anymore to take buys. But if price is, as you said, if price broke two structures and there's nothing on that, it's most probably gonna build up and then fly. When does this happen? On news or major liquidity grab? Major meaning 1 hour structural points, or 4 hour previous day low, previous day high, previous week low, previous week high. So yeah, but we're gonna talk about that as well. So let's continue. And we have some examples here. It's gonna make it easier for you to understand. This was on 2nd of November. Yeah, this was the day. Oh yeah, okay. So we had this inducement high, that's one. This inducement low, that's two. But price was obviously building up to the upside to take this down and to rebalance 1 hour price action. Okay, and obviously this buy was easy, right? We have a breaker here, broke structure. And if you ask me, like, do I care if there's a candle or a wick? I don't. It's still breaker liquidity for me. Yeah. So this is one example, and there were easy buys on this guy. I didn't take those. I don't even know if I was awake, but yeah, you can study this. So let's go to the next example. Yeah. So 9:50. Oh, it's been only 1 hour. Yeah. So this perfect example of how often it happens, right? Breaker liquidity taken out. You can say this is a breaker, but you know, the whole thing is breaker, basically. Oh, I marked it wrong. This is the last sell to buy. So this whole thing is breaker. We just refined it to the bottom. And price later on targeted this and reacted of this, but it didn't fit into the photo. Again, this is the last sell to buy. This is the whole breaker, but we already had a reaction right here, and that became breaker liquidity. So yes, just test it out. Is I dare to say it's my strongest liquidity type because it's both breaker and support and resistance liquidity and works like butter. So yeah.